Hi, I'm Kep Kepner, CPA here in Dallas. I'm going to talk a little bit about financial sanity. Financial sanity for most businesses comes from having a routine, productive, complete financial system that results in financial statements and reports when they're needed by management. But not only that, but also prepared on a regular basis. So that's the first step. You've got to have financial statements. The second is you've got to understand them. How would you like to go to a meeting with your banker and the banker says, well, I notice you had a good profit, but your gross profit is down by 13%. How are you going to respond to that if you don't understand your financials? And if he presses you and he knows that you don't understand that where you make money is at the gross profit line, not at the net income line, then you're going to look not so good to that banker. And it's going to taint your relationship with them. So you not only have to have routine, meaningful financial statements, but also you have to know what they mean. So a good CPA will educate you about those financial statements. So over time, you'll begin to understand them. It's one thing to get financial statements that are technically right. It's a whole nother thing to make sure that the knowledge that comes from that is usable. That's where consulting and coaching comes in from a CPA. We prepare financial statements that you can trust and that your banker can trust and that your partner can trust and that you have knowledge about. So that's the kind of set of financial statements that you need to have. We prepare them not just so that you understand them, but also so that if somebody asks you for it, you don't have to say, well, the last set of financials I have were 6 months ago and I haven't had time. Business is so good that I haven't had a chance to measure how well I'm doing. Doesn't that sound bad? The reality is they need to be ready for you when you need them all the time. And all the time you're not ready. If you go see a banker and you have a partner and you're getting ready to talk to him about the loan, one of the first things he's going to ask for is updated financial statements. We're in August, and if the last financial statements you have are last December, then the reality is he knows that you're not running your business well. And that's going to impact your ability to get a loan. The other thing is that financial statements should give you the capacity to drill down on the data so that you understand what's on each line of the financial statement. You're going to have a financial statement that showed dues and subscriptions being $10,000. You'd say, oh my gosh, what is that? Well, the reality is that might be dues to various business organizations, or it might be something else that you classify that way. As long as you have a chance to drill down on the numbers and know what they mean, then you can use that to make a good decision about whether to continue to spend that money, to spend more, or to spend less. You have to isolate those numbers in your financials and drill down. As CPAs, we teach our clients how to do that. If you need help in that area, give us a call. Thanks.